Nelson Aldrich. And that brings us right back to this secret meeting on Jekyll Island, where legislation to regulate banking was being drawn up by bankers. So that was a bizarre situation there, but that's the way it was working out. In attempting to form a banking cartel, these men were well aware that a cartel is not self-sustaining and not self-regulating, because what eventually happens is one member of the group, with the passage of time, becomes stronger than the others, and then that person or that organization, that bank, would say, well, why should we stick with the restrictions of the cartel? Why don't we bust out on our own now that we're obviously the top dog? So in order for this cartel to work, it would have to be sustained and regulated by the federal government. And the legislation to create this cartel would have to be enacted under the deception that it would be for the protection of the public. So in summary, these were the main challenges that faced that group on Jekyll Island. The first was how to stop the growing influence of small regional banks and ensure that control over the nation's financial resources would remain in the hands of the big New York banks. The second was how to reverse the trend of private capital formation and recapture the industrial loan market. Thirdly, how to protect the banking industry from bank runs. Number four, in the event of a bank failure, how to shift the losses from the bank to the taxpayers. Now, it's interesting to note that around this time, the move toward the adoption of an federal income tax was going on as well. And it's not just coincidence that 1913 saw the enactment or the ratification of the 16th Amendment, which allowed the federal government to tax income from whatever source derived, because the bankers, if they were going to be setting up a system to loan money to the government, they wanted to make sure the government was going to be able to pay them back. And what better way to do that than to allow the government to tax the people so that they could pay the bankers. And number five, how to convince Congress that the scheme was a measure to protect the public. So it was understood that the bankers and the politicians would have to become partners in this enterprise, and that the structure of the cartel would have to be in the form of a central bank. So to cover up the fact that a central bank is merely a cartel that has been legalized, they would have to lay down a heavy smokescreen of misleading jargon and focusing on how it was going to benefit commerce and the public and the nation by promoting full employment, bringing stability to the banking system, lowering interest rates, providing funds for beneficial industrial projects, preventing financial panics in the economy, and so on. These were the stated goals of the legislation that they would use to deceive Congress and the public. And they were trying to hide the fact that this plan was really designed to serve private interests at the expense of the public. For purposes of public relations and to ease passage through Congress, they had to avoid the use of the word bank altogether. So they had to conjure up the image of a government operation. So they came up with the first word, federal. So that would make it look like it was government endorsed, government operated. The second word, reserve, was designed to give the impression that there were actually monetary reserves somewhere, which would give the appearance of financial soundness. And finally, they came up with the word system to generate the image of a strong, extensive, well-organized network. And then as a further cunning ploy, they set up 12 regional institutions to give the impression that it was going to be decentralized. So after they came up with a draft of their legislation, it was introduced into the Senate as the Aldrich Bill. And right away it was attacked as the Wall Street plan, because Aldrich was connected to the New York bankers, the money trust as they called it. And the bill never even got out of committee. for a vote. But the groundwork had been laid, and with the passage of time, there would be power shifts in Washington so that they would have another opportunity to bring this back onto the table for consideration. So Republican President Taft at the time was not supporting the Eldridge bill either. So for the election of 1912, the bankers had to support a candidate that was going to support their bill, and so they threw their support behind the Democratic candidate, Woodrow Wilson, who had publicly declared his support for the plan. And to make sure that Taft was going to be defeated, the Money Trust encouraged Teddy Roosevelt, the former Republican president, to run as a progressive in order to pull votes away from the Republicans, and this allowed Wilson to win the election. So after Wilson was elected, the Aldrich bill was given cosmetic surgery and was reintroduced as the Glass-Owen bill. But it was still essentially the Jekyll Island plan. The new bill was actually written with a number of sound features to make it more acceptable. But these were intended to be dropped in later years because the plan was, the strategy was to get something, anything on paper, get something passed, and then later, when nobody's paying attention anymore, then we can change things. We can drop the stuff that's going to restrict us, and we can loosen the constraints. The bill was finally released from committee on December 22nd, 1913. All the people in Congress were eager to go home for Christmas. They didn't want to waste time debating. They just passed it through the House, through the Senate, and the next day, President Roosevelt signed it into law. So what are the consequences of this historic event? The bottom line is that the Congress and the Wall Street bankers entered into a partnership in which Congress is able to access unlimited funding without having to openly reveal that they are essentially taxing the public through the process of monetary inflation. And the banking system is given the privilege of collecting interest on money created out of thin air. And to see how this works, I'll run you through the process briefly here. So Congress gets its money primarily through tax receipts. But sometimes the U.S. Treasury reports that, guess what, we don't have enough money from taxes to pay for everything that you guys want to spend money on. So then what happens is the government printing office swings into action, and they print pieces of paper called treasury bonds or treasury notes. And they are sold to the public, various financial institutions, foreign entities, whoever wants to buy it. Whatever they cannot sell in the private sector, they then go to the Federal Reserve, who then writes a check for the treasury securities that the government wants to sell. There is no money in any account covering that check that the Fed writes. Anyone doing this other than the Fed would be committing a crime. But as Nixon said, if the government does it, or if the government allows it, then it's not illegal. So they do this because to raise taxes would be politically suicidal. Taxes are very unpopular. To print large amounts of currency would be too obvious and too controversial. So by use of the Federal Reserve System, the process of the government borrowing money and the Fed creating money out of thin air is buried deep down inside the banking system where it's out of the public eye.